Hey everybody, Frank Finance here. Hope you're having a wonderful day. Big news from Google out. They just announced during their earnings that they would do a 20-to-1 stock split. They're currently trading around $2,700 and they're up about 5% after market on that news. During their earnings, they also beat on their earnings per share by about $3. I think $27 to $30. I'll show it right here. And they also beat on their revenue estimates by around $3 billion as well. That is also a contributing factor to them being up after hours. I believe with this news, you could see them easily get up to that $3,000 mark when the stock split exactly occurs. I'm not sure at this moment. Another metric that was up for the quarter and is also going to draw a lot of attention is that revenue was up 33%, which there was a lot of concern about slowing growth at Google, and based off of advertising concerns around, like, let's say the iPhone restricting ads, those kinds of concerns. They thought that there was going to be a constriction in Google's revenue. However, they did impress with a 33% revenue growth over the year. So it's a really good quarter for Google, and for investors who currently own or looking to own Google, it is definitely a vote of confidence for their future. For those who are existing shareholders, that 20-to-1 split is definitely going to be a huge contributor to some short-term capital appreciation. I think that 3,000 is pretty conservative. I think it could go up quite considerably. Now, that would expand their PE ratio. It will also greatly increase their market cap, which is getting very close to $2 trillion at this point. So, it's going to be crazy. I think this is a good thing. Thankfully, I own Google, so I'm not worried about this in any way. I'm pretty excited. So, I think it's just going to make liquidity for owning Google that much easier. Now, with the addition of stocks, stock slicing these days, like with Charles Schwab and Fidelity, people have already had the ability to buy fractional shares of, these large companies that have, a $3,000 stock like Amazon or Google. If you don't have $3,000 sitting around, or you don't, your asset allocation, if you buy 3,000, it's going to overweight your portfolio. That ability already exists today, with those stock splices. So I don't know exactly how much, but typically in the past, when these stock splits occur, you can see the stock run up quite considerably. I think we're already getting close to 3,000 thus far in after hours, so we'll see where it goes. Until next time, thank you so much for watching. My name is Frank Finance, out.